Hey everyone, how's it going? I think you can hear me. I hope. Can you type into me and let me know if you can hear me? I'm on a different computer right now. I'm not sure if my setup is working correctly. And
I can hear you okay. No
perfect,
problem.
great. Thank you. Thanks so much. Okay. So I'm on a different computer, so I apologize if things don't go quite as smoothly as normal. Today we had a very active day and pretty exciting. In terms of movement, we actually ended up going nowhere, but during the day we saw some volatility. We traded up quite a bit. Then bears took control and brought us all the way down into the close. So we'll take a look at what that now makes our daily picture look like and see if that changes our story or furthers our story in any sort of way. So if we look at the S&P, but really this morning, we were not expecting the market to really move or choose a direction because we have that CPI report coming up tomorrow. That's going to be a major driver in the force or in the markets. If I am pretty sure it will be before market, maybe an hour or so before the market. I just need to find I guess I don't have it open. We'll go to US. Okay. Tomorrow CPI, it'll be 5:30 in the morning. So by the time we do the pre-market video, it will already be out and we'll have seen half an hour of trading in the pre-market. So we'll get a really good idea of how the market is going to respond to that CPI, at least initially. During the day, it could shift around, but with something like a CPI, it should be pretty clear in which direction it's going to go. So it's not too surprising that we didn't really move anywhere on the S&P, down 0.05%. So basically not really any change at all. Sort of an indication of sort of the sideways movement. We would want multiple days in order to really call it sideways movement. But of course, sideways movement can go in a range as well. It doesn't have to be exactly at a precise penny by penny sideways movement. So far, it's looking like we rejected prices to the upside more so than to the downside. So there were some bulls, there was some people still trying to buy, and then the market kind of brought them back down. So we may be running out of buying inventory over here. This is kind of the pattern that I was talking about this morning. You have a very low volume and very low range. You have a large wick right here, indicating that there's downward pressure and there's selling. So if this is near a top, or it's looking like we haven't quite formed a top yet, but it could be the formation of a top. But what we haven't seen is consolidation. So if we got this at the end of a consolidation or after there had been a period of consolidation, then it becomes much more likely that's a signal that we're going to pull downwards. Right now, we can't really say with too much confidence because we literally just traded right up here. And this is pretty close to all-time highs. All-time high was today. Okay, so this high is the all-time high. So it's too early to say that this is going to indicate a downward movement. I'd be a lot more comfortable if there was consolidation to the side. So other than that, there's probably not too much to talk about. We've already talked about how we're topping out all these indicators, that there's just too much. This market is just overdone. And there's probably not a lot more room that it can keep on going up, at least not without a pullback. If we get a baby pullback 2 to 3%, then we could go up a tiny bit more. If we go down 5%, then we could move up, probably up to, and this psychological resistance, maybe a little bit more. And then we're really looking at inventories being empty I'm sorry, not inventories being empty, cash. No more cash for the market makers. They're going to have a really hard time bringing it any higher or being able to utilize any more cash because they're all out. They would want to start selling at this point. So we're going to just look out for signs of that starting to happen. Let me check on bonds real fast, see if they made a significant move, because the pool of money that goes into bonds is somewhat separated from the pool of money that goes into equities. And so far. Let's see, May is down at 57% now. We were quite a bit higher last week. So we were at 60 something. I thought we were higher than that even last week, probably on different days of the week. So we might see that number pop up a little bit tomorrow or the day after. And then we should start seeing this come down, especially if TLT starts moving downwards. And TLT looks like it's chopping sideways, indecision, which is not surprising because CPI will have a large effect on interest rates, which is a direct relationship with bonds. So tomorrow we might see some volatility and some movement here. And let's take a look at VIX. VIX is starting to creep up. So that is really interesting because SPY went nowhere today. It was down 0.05%, didn't go anywhere. But look how high our VIX went. We went from 12.9 to 13.9. We went up a whole point, 7.59% on a market that moved nowhere. So this market is starting to feel a little bit more jittery. There is anticipation by the market makers that there might be a large move coming. So they're widening out their spreads. They're widening out their volatility so that the range of prices that they'll be safe in when the options move is a little bit wider. And we keep seeing this happen, especially if we see the S&P 500 keep going upwards. That is a very strong divergence. In fact, I just noticed this. I probably should have looked more carefully in the past, but if we look right here, we have a very strong, whoops, what is that? Divergence right here also. This is a price volume divergence. Prices keep going higher and higher, but it's doing it on less and less volume. Look how tiny the volume is today, although that might get corrected. We don't want to read too much into it until tomorrow, but if it does get corrected, it might just be the same as this bar or this bar right here. So we are really going up on lighter volume, and that just doesn't bode too well for the strength of this, for the continued strength of this uptrend. So over here, we had increasing price, increasing volume. We had flattening price, and then kind of choppy volume. And then we had an increasing price on flat volume. And now we have an increasing price on decreasing volume. So that's a poor sign for the continued upward movement of the S&P 500. So we just want to be careful. This is really a time where it just really feels like we are starting to top out. And there's a lot of forces now that are in play that will probably result in the markets coming down. That probably won't happen until after earnings seasons, though, because earnings has been going pretty well. At this point, or by the end of this week, 75% of the S&P 500 market cap will have reported. And then so far, everything has been positive and overall and looking very good. So this will probably keep on trending upwards because earnings is the major force in the market right now. Other than here and there, there's an economic report. Economic reports tend to have an impact for 1 or 2 days. Earnings, sort of the same thing, but we keep on having earnings, so it keeps on having an effect. So the somewhat longer term, I guess I should like the 1 to 2 week force in the market right now is the earnings. And then once we run out of earnings, then everything else will come in play. If there's nothing else to prop up the market, and if the market makers are out of cash, then that is the time where we're going to start seeing a larger pullback or a correction, or the soonest that we will see, I should say, the soonest we'll see it. So we probably have another week of, or week and a half of chop or upward movements, and then we will probably come and test a trend line and maybe even a pullback or a correction. I think that's all, because nothing really changed today. Well, let's just take a look at our sectors. So we started out this morning saying that it looked like we might be focused on the Dow Jones, the blue chips, the staples, the more defensive type of sectors. I want to see if that actually happened today, because in the morning after the beginning, after the open, when we started coming upwards, that definitely was not true. Like the tech started to really catch a bid. But on the sell-off, I don't know what happened. So maybe it switched back. So let's take a look at that real fast. Got my sectors, and we'll just look over the past day. Retail and energy. That's interesting. Okay. So retail is doing very well. There, I would imagine that's probably some large retailers' earnings are about to come out and people are optimistic about it. We can check that real fast. What is today aftermarket? ANET, CDNS, both of those are technology. Then we've got waste management, that is business, industrial, I guess. And then tomorrow before the market, Biogen, Ecolab, Hasbro, Insight, Coca-Cola, but that's kind of a staple. Marriott, that's a leisure, so that would be discretionary. Tap beer, so that's usually under a more defensive sector, so that's usually more of a staple, even though technically people have a choice of whether or not they buy it. But in what we see is in hard economic times, people tend to drink more. They just switch to cheaper brands. So the behavior of it is more like a consumer staple. So I don't see a major retailer. So I don't know why retailers caught a bid today. That's really interesting. But we'll just accept it. And if it's only for today, we're not going to make a big deal out of it. If it's all week, then we'll really start to take a closer look at it. Energies, utilities, staples. So we did switch back into the more defensive sectors today, at the very least towards the end. That certainly wasn't the case at the open. But as we sold off, it looks like money went into those more defensive sectors, and we are doing our flip-flop again. It's almost weekly now. For the past couple of months, we've been tech, defensive, tech, defensive, tech. Last week was tech, and today starting out defensive. So if this pattern keeps up, I mean, that might even be an investable idea. I could just start taking pairs on my sectors. I could just take, for example, I could take utilities or staples and say, hey, let's go long staples, short tech. And then next week I'll flip it around and go long tech, short staples, because that's been a pattern for the last several weeks, even couple of months. But and it is also indicative of no resolve or certainty in this market. And if there's no resolve or certainty, then a trend cannot last too long in that type of environment. So just another sign that this could be weakening a little bit, that at least underneath in the surface, it may not appear that it is weakening, but in the foundation it is. So if I have a building, it could be upright and look like it's perfectly safe, but if there's termites eating at all the posts, eventually those posts will rot and collapse, and you wouldn't be able to tell from the outside of the building, or even necessarily from inside of the building. It's not until something breaks or someone leans on a post or crashes into it, then things start collapsing. So it's just weakening at the foundations, and we won't expect this trend to keep on continuing for too long, but at least for the next week or so, it looks pretty safe. Okay. So that's all. Since we didn't get really much action today, that's pretty much all there is to talk about. If you have any questions, shoot them my way. I'll be happy to answer them either tomorrow morning or in tomorrow's afternoon video. If there's anything you want me to look at, if you have trade ideas or you want me to look over or come up with a certain type of trade idea, just shoot them my way and I'm more than happy to take a look. All right, so that's all for today, and I will see you guys tomorrow.